Welcome back to another episode in my trading vlog. I'm going to be talking about SPY quite a bit today because, well, look, it's just another big green day. I'll go over AMC and GameStop very quickly as well. Maybe I'll touch on Playboy, GLD, and gold miners sector ETF. But let's just start here. I wanted to go on the daily time frame just to look at this green candle. This is quite the gap fill. That didn't happen in the early AM of the session, kind of happened towards the end of the day. Very interesting. Let's take a peek at the volume, which is generally decreasing here. And it's kind of hard to say. We had a burst of volume send the price up, and now we're watching that volume fall down. So we'd be looking for this to be decreasing in a corrective wave down before another bullish push higher. SPY is starting to look like it wants to move, but look, overall, this uptrend has been accompanied by decreasing volume. So this would be a classic sign of weakness. Something else too to keep an eye on is that implied volatility is not rising. It's not. And so if we are going to be looking at this with a bullish bias, we need to be very careful because, well, first, if this were to be a wave 3 in a 5-wave motive count heading higher, implied volatility would probably not be falling. Implied volatility tends to fall in corrective waves. That would be in wave A and C. So here's A, B, and C. That would be a classic zigzag heading higher. I have this labeled currently in a triangle. You can look at it in a couple of different ways. I think each wave is valid. You're going to notice that the triangle breaks out at point E, and it's possible that this is all just wave E. Wave E is generally frantic, just like wave 5, and that is what this feels like, doesn't it? There are a lot of gaps here on the daily time frame that need to be filled, or generally are filled. Price doesn't need to do anything. Just remember that, price doesn't need to do anything. The RSI is still relatively low too. We're hanging around just at 60, which isn't a very bullish level. You want to see the RSI kick off into overbought before we really flip bullish here. And you can see on the daily time frame, we didn't get overbought in the RSI until, well, August of last year. Yeah, so I think there's a lot going on here. We need to be very careful about being too bullish, but it does look like there might be one more push higher. Let's pull up the MACD. You can see the histogram. The bars are starting to fall. I'm expecting the distance between this blue and this yellow line, the short and the long period averages, to come together, and that would probably signal the end of this uptrend. It's looking really like this could be the top here. Generally, I call the top a few different times. I've been trying not to call the top, but again, it's like nothing here yet screams that bullish. It does look really bullish though, doesn't it? We could easily call this waves 1, 2, 3, 4, 5, put one more push higher to finish the uptrend, or we'd be in a third wave extension, which would be explosive in the market head to, yeah, near all-time highs. It's very true. The market's responding mostly to news at this point. Overall, I don't think that there's a lot of reason to be optimistic. Meanwhile, our international relationships with China are deteriorating because we need that trade. We need that trade. And if that trade starts to decrease, that could put a big weight on a lot of different specific stocks, kind of like Apple. A lot of companies that have these relationships with China, if there's a disruption in that trade, that could be a big deal. So Apple has been coming off of this high. I was forecasting this rally. It happened at a slower pace and took longer, and it came in after a dip that was a little further than I expected. So for a couple of different reasons, I'm going to say that this dip was expected and that this rally was expected, and I forecasted both, but this is looking kind of weak right now, and it almost looks like this is a corrective A, B, and C wave higher. I have it labeled as a motive wave currently, but that may not be the best interpretation. You're going to see that implied volatility ticked up on the day. Yes, the candle is green, but the close is much lower than the previous day's close. The RSI here did reach overbought and is now turning down. If we get a new low on the RSI, which it looks like we may just about have done today, then this is probably peaking out. And Apple is a big part of QQQ. So let's go ahead and open QQQ. I was expecting this to die a lot earlier than it did. So I've got a cat trying to climb on my shoulder. This is, okay, cat, down you go. So QQQ, I wasn't expecting to pass that 313 level. When we did, we have to say, hey, we could head higher up towards even that 331 level, possibly. Again, I see us moving through an uptrend that is converging in peaks. I should say that the uptrend and the resistance, overhead resistance, is making a rising wedge. Pretty clean. And the wave pattern through here, I think, is bearish. I think we have A, B, C, A, B, C, A, B, C. It's possible that we actually have, let's see, I'm going to count sets of ABCs, which is sets of 3. We should have 4, and then the 5th, I think, might be the breakout. So we'd have 1, 2, 3, 2, 2, 3, 3, 2, 3. Or is this up here? Is this C? So maybe this wave here needs to move over. And this is wave C. And then we have ABC, and then I'd be moving B, kind of over here for this dip, probably in the middle, but it's not super clear, right? It's not super clear. Maybe that's actually A. I have to go through and relabel this. At any rate, we're getting to that point where this triangle is almost complete, and we could get a breakout at any time. Let's have a look at this in a line chart really quickly so we can try to identify if it really is an ending diagonal triangle. I'm just going to start on a blank chart here. Okay, so this was actually a rising wedge target I put down, and I used Bukowski's chart pattern analysis, so this is assuming that we get a breakout towards 310, and then we get the falling wedge target would be 291. We see that over that the RSI here is setting up a bearish divergence. So price is setting a higher high, quite notably through there, and did not set a higher high on the RSI. So this could be a long trend here that we're going to see corrective heading down. Meanwhile, the MACD is kind of hinting at that. You can see the histograms here are dropping, and the distance between the long and short periods is decreasing as well. Implied volatility not really following the price higher, but swinging wildly through short, brief dips and peaks. It's curious to see implied volatility doing that. It's probably related to the averages and how they were evened out by this dip we saw towards the end of last year. Looking at volume here, again, you're going to see that same similar trend where volume is starting to come down. This yellow line, that's the 30-period average, and that is actually coming up. Maybe it's starting to peak, so maybe overall we are starting to get that decrease in volume. That would tell us that our rally is almost over. After all, you can easily see 3 touch points here at the top of this wedge and 2 at the bottom. So we are looking for that breakout heading down. So that'd be 291. Again, we could see another high, but honestly, I think that we're topping out. I'm calling the top. Calling the top. I wasn't really thinking about I was going to do that today, but I think it's time. What we really need to confirm that, though, is a new minor low, and that'd probably be right here. So if we hit that 291 target and dip below there, then we flip full bearish, right? At least for the time being, I think we're going to see a short-term downtrend in QQQ and SPY. I'm going to pull up SPY in a line chart here while I have the set up that way. And yeah, you can see that maybe even that SPY is also going through some sort of diagonal, but it could be a reverse. Could be a reverse triangle. That happens too. It's very confusing because the price expands and it confuses everybody, right? So how do you know which way this thing's even facing? And you usually don't. Good clue is the RSI. This is not a very bullish or emotive move for the RSI. It's really not. Maybe we should go back to when SPY was in a bull market and kind of check out what that looks like. You know, here you go. There's some bullish daily price action on the RSI, right? Here's some more bullish action. You know, you can see this big dip, right? RSI here is dropping because it's an average, and it was just so gradually inclining for such a long period that this brief drop sent the averages down. But, you know, RSI pops right back up. It's generally heading above 50, staying up there. It doesn't always have to hit overbought, right? But you can almost see that at this point in time, we weren't seeing much in terms of oversold until we get back to COVID, I'm sure. Where's that COVID crash? Looks like it's still a ways back. Anyway, I don't need to do this. It's beyond the time frame I have showing up. So there it is. You can see it back here. Oh, no. Okay, so anyway, SPY and QQQ, I think we're peaking out. Let's go talk about the dollar. I think that the candles that I've been looking at, that I don't think these candles are correct. I mean, okay, the open and the close here coming in within pennies of each other, right? 102.54 and 102.58, so 0.04 hundredths of points. This is ridiculous, but I remember this was when during the day, this was a tall green candle. So I think that TD Ameritrade is just incorrectly showing me this data, which is very frustrating. But what's curious is that these series of dojis are coming in basically right after the Federal Reserve announced the daily currency swaps. So and that was an attempt to make treasury bonds more liquid to foreign banks, I believe. We're going to notice that the MACD here, not that, but this, the histogram appears to be coming up now, and we have our periods here, the long, the short periods coming together. So when these two things cross, we're probably going to see a bullish move in the dollar. And I've been calling for a dollar bounce, right? We could be getting there. This downtrend needs to go first, but overall, I think what we're looking at is the potential for a big double bottom or a triangle right here. Maybe some sideways grind. That'd be good. This peak right here, that makes me think, hey, we got to watch out for some sort of broadening pattern. Broadening patterns are the worst. They really are. Reverse triangles, they just keep you guessing. They really do. But I want to say I see 3 or 5 up, and I can see 3 or 5 down as well. So yeah, we definitely have a clash of different corrective and motive waves happening here on relative degrees. And so maybe what we get a nice clean double bottom. That'd be confirmed as price passes above 105.85, and at that point we'd be targeting. Let's just do a quick extension here. Let's see, we'd be coming probably up here towards 108, not quite to 109. That'd be a good target though once we pass 106. That'd just be a 3-wave or a C-wave extension. And if we get a little consolidation above 106, that'd make sense, be a nice double bottom with a handle, and then off the races we go. I don't think the Fed's done raising rates yet, but again, we're gonna have to wait for CPI data to come out because that's what the market's just focused on. I don't think that it actually fundamentally is really what the market should be worried about. I think the market should be worried about deflation, right? That's what the problem is. But I guess on the flip side, if inflation is going away, then people are happy, but that's really not what it should be. I think if we see inflation go away, that means that the poor earnings that we've been seeing are going to get worse as growth slows. So I don't understand why the market's facing the way it is. I think people are just stuck in their old school thought. Going to the 10-year Treasury bond today, we saw a gap up and a nice strong green candle here as well. We could be in a strong push lower heading to 29.32 or 25.23. This would be the case if there's a flight to safety and bonds are purchased, then yields will drop. At this point in time, looking at the RSI, we can see that there's quite a bit of support down here at 35. That is to say that the averages don't fall that low. MACD is looking weird. It's looking weird, but maybe we're about to flip bullish here too on momentum. In fact, it looks like we had something of like a little scoop and then a poop. But no, I really am thinking that the MACD is looking less bearish, that this might be the end of this little corrective downtrend. And what we get next is a big push higher. Now, rates would have to be going up for that. Really, I think that the Fed's going to have to raise rates to make that the case. So, again, I'll be keeping an eye on TNX. I think these rates have a big effect on the markets. They really do. Why would you go into a losing stock market if you can get more in yields? Again, SPY is being pumped right now, and so maybe there's some dumping, and that's what's causing or dumping of bonds, which is causing the pumping of stocks, right? Like maybe the markets are going risk on again. I don't think that's a good idea. I really don't. Nope. But whatever. I'm just a vlogger here. So what's next? I said I'd look at AMC. Haven't peeked much at AMC very much these days. It's been quite the dramatic saga. It always is. Always bouncing around, going all over the place. It looks like I've forecasted a 3-wave ABC correction heading higher, targeting that $6. We get that confirmation as we pass above that bullish continuation mark at $5. So yeah, we had that. We got a nice little triangle through here, and that tells me we're probably looking for a C wave at a smaller degree to take us, oh look, right to that mark at 596. Wow, you saw it happen. I didn't plan that. That's just the way it played out. So overall, this is actually looking kind of bullish. Is that weird? It's not really bullish. That's a corrective bounce. MACD is losing momentum though, right? So maybe we dip more before bouncing up. If in that dip we lose $5, forget about it. But also remember, we could be in a broadening pattern. You always have to keep that in mind. The markets are going to be like the trickiest, most slippery, sly thing ever for a while. If we were in some sort of broadening top, we'd be looking for a test of this downtrend basically again. And that would give us a nice broadening top, right? And from there, we'd be looking for a partial decline and push down. So I kind of have like two things here. One's a straight push up and one's a drop down, a bounce, and a further decline. Of course, there's always a bullish and a bearish analysis. I personally am always generally bearish on AMC. There was a brief moment where we were back here and we were in an uptrend. And I was like, yeah, let's be bullish. That's cool. But I don't know. Right now, we don't really have an uptrend present. What we have is this weird looking thing. Maybe we're building a diamond. I don't know. AMC and Ape, they go hand in hand. They should be coming back to the same price now. You can see I had forecasted a bounce for B. We got that. And now I'm saying, hey, looking for C. This is a long time forecast, so this has been a long time playing out. Just waiting for it to happen. GameStop, I like GameStop. We've been moving through this flag pattern through here. It's getting pretty long. I think that's good, though. I don't think that's bad. Not yet. We're going to have to make a serious move down I'm not sure where the critical level of support is here because of how long this flagpole is. But this is an earnings flag, and Bulkowski does have some price analysis here. And if we get above the top of that flagpole, then we're looking for 32.56. This is a good target, double bottom target. There's a couple of levels, bounces here at this 1577 level. And the price did pass above the confirmation level, but it did not hold that. So that means that we're seeing... well, this could be weakness. It could be. But again, maybe it's just a B wave, which tends to be in a horizontal triangle. And when it is in a horizontal triangle, it typically means that the next impulse is pretty strong. And so, hey, 32.56 doesn't sound so bad, does it? Again, watching this with a lot of caution because you never know. This could be a triangle, a descending triangle. You got point A, B, C, D, and then this would be overthrow for E. And we'd watch the market then melt in that scenario. But descending triangles used to be Bulkowski's favorite chart pattern, and here it is, and it's pretty legit. So I would say that's a pretty fair analysis. Let's go to GLD. Let's talk about some of these equities that follow the metals. I see a big triangle, a big horizontal triangle through here, and it's following a strong impulse higher. So I'm thinking, yeah, this is probably wave B. And if you have a horizontal triangle in wave B, then you're probably gonna get a strong impulse for the next. Of course, I'm thinking this could be the top of wave 5, but what if this is actually 1 of 2, 2 of 2, and this is 3 of 2 starting? And if that is the case, and this becomes a third wave extension, then, I mean, we're really off to the races. Looking at 217.27, that would be nice, wouldn't it? So I went ahead and increased my position here. I'm going to be holding GLD. I was happy to see it bounce. We're kind of hugging this trend line that we broke down through. And we'll see if we don't get back up and challenge this downtrend in the near future. If you ask me, this kind of looks like a strong motive push heading lower, doesn't it? It's kind of occurring after this big push higher too. So I want to say impulse, and this looks corrective. A, B, C, X, A, 1, 2, 3, 4, 5. Yeah, this could be like some sort of weird zigzag through here. A, B, and C. It's hard to know. We don't really get a bearish confirmation until we pass below 181, and we do have a nice breakout above this triangle. A couple closes below now, so we'll see if we hold this uptrend. If we do hold this uptrend again, I think we're off to the races and we're gonna fly. Let's go look at SLV. I was calling for $23 to $24 a couple of weeks ago, and whoa, my charts just won't stop moving on me. Let's try on the daily time frame, and we did get up about there, getting to 22.73. You can see I've got several overlapping targets through here. We've been reaching these. This has been great. I hopped out with profits early, obviously, but it's been nice to see that this is following the analysis. Generally, these things do take longer than I think they will. If we do see the dollar rise, then I am expecting a retracement in the metals in SLV and GLD as well. So this is a bit of a strong push. Remember, this can come down 61.8%. So there could be a buying opportunity here when we get to that point. I'm just going to go over to GLD. Because again, that same analysis could support a dump in GLD. And you might be saying, hey Cap, there's a nice inverted head and shoulder pattern through here. That is true. That is very true. But again, we could go for a big retrace before pushing higher, and that would make a lot of sense because this could be the top of that motive wave. So I'll be stopping out probably right here towards 181. If we get there, stop out, re-enter lower. I'm not super interested in holding something that is declining when I can just scale back in at a lower price. Let's go talk about Playboy, because Playboy's been pushing down, and that isn't totally unexpected. After all, earnings weren't good yet. I was speculating that the earnings would be much better than they were. We did get some good news, though. We've got some awesome news that Playboy is still well known, and creators are flocking to it, and that's important because that's the direction the company is going. They completely turned their business model upside down, completely upside down, which was actually a fantastic thing. It was a great thing. It's now all content creator centric, right, with an emphasis on women's issues. So I think that overall the branding is doing a fantastic thing, going the right direction. You know, they sold the jet. They're trying to clean up the balance sheet. They had a share offering. People bought the shares, and the CEO bought a whole bunch more. They've got a new CFO. I'm not sure if that's good or bad, but overall, I think if you take the goodwill that they wrote off in this last earnings report and adjust their earnings for it, that you'll find that, ooh, they may be cash flow positive already. So the CEO actually acknowledged that and said that he believes that the company will be showing cash flow positive to neutral by the end of the year. I think that's very possible. 420 is coming up. And Sackville and Company, they're going to be making some product that's licensed by Playboy, which I think was going to do very well. I'm going to buy it for sure, whatever it is. There's no preview, so but like, hey, I'm going to buy it for what it is, right? That's the market. Anyway, so let's talk about the MACD. Crossed over bearish, right? It could just be a blip, right? Like back here, MACD flips bearish, and then boom, we get a nice pull up, price rises. Overall, I'm expecting that we're looking for a bottom here. It's hard to catch bottoms. Implied volatility is increasing with the price decreasing now. So we're going to want to see implied volatility flip down. Volume is kind of petering out over a longer trend. So we could read into this and say that, yeah, our selling pressure is decreasing. We could say that. And as long as the RSI stays above 27 and the price is making new lows, we're going to say that we're forming a bullish divergence. So Playboy is oversold at the moment. And I think moving forward, we're going to get some great news at earnings. But who knows when that's going to be? Sometime in May. So yeah, there could be like another month here of like even more decline. I've increased my position here as well. I'm just going to hold this for a long time. And I think that's where I want to call it a day. It's been a long video, but I wanted to kind of catch up. I was on vacation for a while, and you know, the charts have been really difficult to read, especially with SPY pushing up higher like this. I flipped from bearish to not feeling as bearish back to bearish. Now I'm like, geez, the markets are still pushing higher, but at the same time, it's like, it's still not a great bullish setup. I don't think so. Anyway, I'm going to go. Happy trading.